So since well, you guys don't have any questions, it means that with the question that I have for you today, everybody else is going to participate. Okay, I'm not sure if we'll be able to complete these questions, but I've got 4 questions. It's question 1, it's question 2, it's question 3, and it's question 4. Right, above all this, I would like us to start with question 4, because that comprises the entire set from your journals to the ledger accounts, and basically this is your basic financial statements of a sole trader, if I may put it that way. Okay, so here is your trial balance, or the information concerning that, and I've got some additional information, and the required part says that prepare the entire set of their financial statements. Before I can go back to my trial balance there, I just want to give you information with regards to that, because we can start with any questions anyhow, because they're independent of each other. Right, so you don't have to worry that one might be related to 4 might be related to, so it's question 4 is going to be independent, and then we're going to do it as it is. Right, so this question, it requires us to do the financial statements from your income statement, your statement of changes in equity, as well as your balance sheet and the notes itself. Okay, so the additional information, obviously, it will lead out to some of the trial balance information. Okay, we need to just link it. Right, I'm going to read this one. It says the additional information, data as sitole with an amount of 210 must be written off as recoverable, while this thing has been recovered with an amount of 1,200 rand. And then we've got John, one of the employees has been on leave, and his salary has been paid for January 2022 for an amount of 3,000 rands. Delivery fees of 500 rand and purchases have not yet been paid. The insurance premium of 300 rand must per month has been paid up until the end of February 2020. And then the 1,200 rand for the commission was ended on the 31st of December by statute. Depreciation for both the assets must be calculated at cost on 20%. An open inventory which amounts to 12,000 rand on the 1st of January 2021, and the accumulated depreciation in the beginning amounts to 10,000 rand on vehicle and 5,000 rand on equipment. I made it sharp and easy so that it shouldn't be complicated with regards to the new purchases of the assets and the disposals. So that will obviously trigger your what do you call it, the depreciation calculation. I'm going to give you the format, and then you guys have to tell me which one goes where, starting from that question 4, right? And then we'll take it from there. Okay, when you are approached with this kind of a question, what do you do? Obviously, I'm going to go through line item each by each, and then you're going to tell me where does it go. And then I'm going to produce the solution at the end of the question. Okay, right. Question 4, we've got a trial balance at the end of the year, 31st December 2021. We've got a capital, we've got a drawings, and then we've got our asset, which comprises of your vehicle, equipment, and inventory. And then we've got a whole list of expenditures, right? And we've got our incomes and the additional information. Right. So let's say you're doing the income statement. Where do you start? I'm going to do this. I'm going to pick you. And as soon as I pick you, give me an answer based on the transactions that are available on your screen as to where does it go, or where does it fit in terms of the financial statements. Okay. Let's do this. Trial balance, we've got a capital of 300,000 rand, and then we've got a drawings of 6,000 rands in here. Pumi, based on the information that is given in here, what are you going to do with the capital? Tell me, what are you going to do with the capital and drawings? Under the statement of, under the set of the components of the financial statements, where does it go? What must I do? What must I draw?
On the statement of the financial position, is that what you're asking?
Where does it fit in terms of the statement of financial position, income statement, or the statement of changes in equity?
Okay, your capital goes under equity.
It will go under the equity. So it means I'm going to have my statement of changes in equity. That's what you are saying. Statement on changes in equity. Right, and what do you do? Should I say capital?
Sorry?
I say capital with the same amount.
Yes.
Okay. And then where does drawings go?
Your drawings would go under your, isn't it your liabilities?
She says liability, all right? Okay, she says capital would go under the statement of changes in equity and the drawings will go under the liability. Oratile, Moroke, where do we take drawings to?
I think that the drawings will still go under a statement of equity, just that they minus the capital, if I'm not mistaken.
That's very correct. Drawings will go under your statement of changes in equity with the same amount. So they are a deduction towards your capital as well. Thank you so much. Who answered that? Just Nano?
Oh, Tepiso.
All right, Sepiso, thank you very much. Okay, meaning that the first top part, we are done with it. Let's look at the asset. Okay, one thing that I've told you the last week was before you do the line item under the statement of financial position named the property, plant, and equipment, you need to do what's called the note first, right? Can we start with that? We've got vehicle, and we've got equipment, right? Who wants to lead me? So the framework would be your cost, and then you're going to have your accumulated depreciation at the beginning. Basically, you're going to have your cost, let's say, the carrying amount. It is, so carrying amount, then you're going to have cost, then you're going to have accumulated depreciation. Okay, somebody just said yes quickly for me there. Do you want to help me? What do we do? We've got a vehicle of 100,000 Rand and then equipment of 75,000 Rand along with the inventory of 8,000 Rand. Okay, who want to take a shot on the notes? Let's start with the note before we can transfer the carrying amount of the assets towards the statement of financial position.
Yes, we're going to put our cost there under cost.
Okay,
Then we will less our accumulated depreciation.
Okay, let's see. Our cost on the vehicle is 100,000 Rand. Sorry guys, I'll show you the solution at the end of this question. Right? So you said we put the 100,000 Rand and the 75,000 Rand. That's what you said, right?
Yes.
Okay. Then the accumulated depreciation.
We check if we do have accumulated depreciation on the line items.
Okay.
Or check the additional information.
Right. So the additional information, does it have that?
Yes, depreciation for both assets must be calculated at 20% at cost, but then it doesn't say the.
I'm not sure if you guys are on the same page with me. Your total cost of sales is 17,500, and then you deduct that again so that you can get your gross profit. I don't know if that makes sense. So you deduct it from your sales, 350,000 minus 6,000 Rand, and then you've got 344,000. Okay. Meaning that my gross profit, meaning that your gross profit was 344, 1, 2, 3, 0, 344,000 Rands. Sharp. Let's get back to the question again. And then what steps are you taking again in here? What do you do again? Right, Pumi, what do we do on the income statement? How further do we extend our steps? Again, I just want us to forget about the cost of sales now, but let's look at the next steps, which is the incomes. What do we do on that part? Then this is the question. And I'm asking you, like, how far do you extend your income statement based on the question that is given to you now?
Your wages is going to be in your income statement. It's going to minus your. I'm not sure if there's anything else on the expenditures that we need to include in our income statement.
Yep, wages is part of it, and there are the expenditures. What is the next step that we do under our income statement?
On our income statement, on the income part, we're supposed to add the commission income, rent income, and the other accrued income, which I once saw on the adjustment.
Okay, can I have what's called? Can I have the line item called other incomes?
Yeah, it's fine. You can do that. Which we add on the gross profit, which we calculated from sales and other from the first calculation.
Okay, my other incomes would include what and what?
So we have 12,500.
12,000 for the commission.
6,000
Yes,
for rent.
6,000.
Okay.
And I saw another accrued income. I'm checking. Data.
Accrued income is financial position.
Okay, it's sorry, I'm still on the income part. Is the rental along with your commission, right? As Oprah said.
Yes.
All right, let's give you a
Yes.
chance to whatever that she's
On the
suggested.
adjustment, I'm not seeing properly. That's why I wanted. Can you scroll down a little bit?
I'll scroll down a little bit. Let me just fill up your answers. 12.5, and you said for the rental as well, it's 6,000 rent. As you can see that under this additional information, do you think there's anything that fits under your income statement?
And a question, I see that for the additional information, there's a 1.2 that was earned, but it's still due. Do we minus it from the income of 12.5 or what happens there?
Okay, is it what transaction number 1 under additional information, or is it?
I think it's the second last one.
The second last.
No, sorry. The fourth last one.
That one, I think it goes on 1,000 was earned, but it's still due.
So I'm asking, do we minus it from the commission income there of 12.5, or do we just leave it for now?
I think it goes on financial position on trade receivables. That's what I think. I'm yet to be corrected.
Yeah, okay.
Trade and other receivables. That's very correct, because that's your. We're still waiting for this amount, so that person will be classified as a debtor.
Oh, okay. Thank you.
Okay, so which means incomes we are done. Then we put on expenditure. We include all the stationery, wages, salaries, the other stuff I can't see now.
Okay, there's a transaction I'm concerned about. I don't know if you guys can all see your additional information. Look at transaction number 1, where it says debtor S Sitole with an amount of 210 must be written off as irrecoverable, while this then has been recovered with an amount of 1.2. What do you think we should do about this transaction?
No, the other 1.2 can go on other income.
Other incomes, right? Okay, I'm going to put it there.
Then 210 on losses, credit loss, under expenditure.
So can I have what's called credit losses recovered?
Yeah, credit losses covered on incomes, yes.
An amount of 1,200 rand, right?
Yes. Then the 210 we put it on expenditure.
Expenditure. So as what? Credit losses.
Yes, or bad debts. But in any word, we can say bad debts 210 rand.
So we still know, is it still Oprah?
Yes.
Well, thank you so much. Let's do this. I'm going to go back to the trial balance now, and then you're going to give me the list of the transactions that are not included in here. So you've got the salaries of 16,000 rand. You've got water and electricity. And then we've got insurance expense.
We'll put it on expenditure.
Okay,
wages. Okay, wages 3.5 expenditure. Salaries expenditure also 16,000. Water and electricity 5,000. Insurance and expenses. Insurance expenses 3,000. It's all under expenditure that I'm listing now.
Okay, insurance expenses.
Yes. I think we are done because the custom excise duties, we remove them on when we're calculating the net sales, the gross profit.
All right. Oprah, thank you so much for that. Mbali, yes. I think there's a line item that is missing under expenditure, and you came up with this.
Yes, it was 35,000.
Yes, sir.
All right, thank you very much for that. Just needed, because Mbali was doing the depreciation for us, so I was just trying to get if she does still remember. Wages, how much? 3.5. Wages? People are gone.
The screen is gone again.
Sir, I think there's an adjustment for wages there, but I didn't really read what was it about.
Okay, let me go to the additional information. You might find it here, apparently. Let's see. When you look at can you see the screen, everybody?
Yes, we can.
Yes.
All right. When you look at the screen there, which adjustment with regards to the wages should be here? Sorry?
Adjustment number 2.
Adjustment number 2. John, one of the employees has been on leave and his salary has been paid for January 2022 with an amount of 3,000 rand. Okay, somebody said adjustment number 2. What do we do here? How do you adjust
We
it?
left the 3,000 because it relates to the next financial year.
Okay. I partially agree with you on that one, simply because remember we've got two expenditures that are more related. It's your wages and your salaries. There doesn't part an adjustment with regards to your wages. Probably your salaries.
So 3,000
Yes,
is part of
sorry, sir.
salary. You
So
subtract
I
it.
thought it's salaries and wages. I didn't see if it's separate.
okay, no, it's fine. I get you there. So I think you're correct there. So you're going to say the actual salaries in the current year and then minus 3,000 rand. Is that what we're going to do?
Yes.
Okay, let's see if it will match. But our salary, okay, let me just go and look at our salaries at the year end. So we've got a salary of, how much is the salary here? 16,000 minus 3,000.
16,000 minus 2,000.
Okay. What is 16,000 minus 3,000? So
We
what's
have
the total?
13,000.
13,000 rand. Thank you so much.
Our 3,000 will go to the prepaid expense on the financial position.
On the financial position. Thank you so much for that one. I like the way you
On
split
insurance expenses, also, I noticed there's an adjustment.
on the
It's
insurance.
yes.
Okay, insurance. Okay, original amount for the insurance is 3,000.
Yes. So we subtract 600
There's
for
an adjustment here. I
January
think she will
and
need the
February. Mm,
100.
I think so. Can we? I can't see now the adjustment, the amount,
To,
which was paid.
can you see it? Insurance expense, the total
The
is 3,000. And
Yes,
you said
3,000.
minus how much? 300.
It's showing what?
Is it showing or is it not showing?
Oh, now it's showing 300 per
Yeah.
month has been paid to the end of February. So which means we have the amount for January and February, so which is
Yes.
minus 600.
Minus 600 rand. Did you all get it? So you just say
Yes.
300 multiplied by 2 and then you minus it for 1,000 rand. Okay, so it's basically 600.
Yes.
Okay, that's fine. And what else do we do? Let's look at the additional information. We are done with this, with number 2, John, who has been paid for the January. So we've got a delivery fee of 500 rand on purchases that have not been paid.
That one, I think it goes on trade payables on the statement of financial position.
Trade and other payables.
Yes.
Okay, that's okay. We've got, okay, insurance is sorted. We've got 1,200 rand for the commission and on the 31st of December, still June. What do we do with this one?
Accrued income.
Accrued
Financial
income.
position.
Financial position is what? Liability, right?
No, accrued income. Yes.
Yeah.
Financial was earned. No, it's
Trade
assets.
receivable.
It's a what?
Trade and other receivables. Assets.
Trade receivable.
Current assets.
It's a debtor, right?
Yeah.
Yes.
Okay. It looks like we are done with our additional information. So let me just tap on my statement of, okay, water and electricity. How much is the amount there? Seems like we've got a water.
Yeah.
And, oh, this quick. It's 5,000 rand, right?
Yes.
Let's see, 5,000. See, we're gonna move to statement of financial position. Okay, we've got assets and PPE. But if you can help me, how much was the PPE amount?
It was 125.
Was it 125,000? Okay, it's 125. Is there any other amount that goes under the property, plant, and equipment? Can we have what's called inventory? And we can have trade debtors, as you all said. We don't have a cash and cash equivalents, right?
No, we don't.
We don't have that. Okay, let me go to my equity part. Equity, what do we have? Capital, right? And somebody says drawings. it will be incomplete because we're still looking at the net profit or loss. But we'll get the whole idea behind this whole thing in terms of this question. It's my intention is for the amounts, not for the amounts to actually balance. My intention is for you to know how the frameworks works. Okay. And that will be that. Okay, let's have our liabilities. We don't have a loan, right, on the liabilities. Let's put everything under our creditors. Okay, somebody was telling me about how much is the inventory? Is it 8,000? Right, I'm going to go back to the additional information, then you can help me with that. So inventory, is it 8,000? Is it 30? Is it 8,000?
Can you scroll down to the additional information?
Got, I don't know what is wrong with that, what I did, but I think I made a mistake here by having double opening inventory. But it's fine. Let's consider one. It's okay. How much is the inventory? Remember, the inventory that goes through to the statement of financial position is the inventory that you are left with when you close the book at the end of the year.
It's 8,000. One for December, right?
Yes.
8,000.
Okay. Then trade debtors. While you're still there, Oprah, how much is the trade debtors?
There?
Trade
The
debtors.
debtors?
Yes.
1,200.
1,200.
Yeah.
Let's see, 1,200 for the was end on this and still due. Okay. So Oprah, is it the only account that we put in here?
Yeah, for now, that's what is available. There's no other information I'm seeing there.
Right, no problem. Let's move on to, please, somebody can somebody give me how much is the equity part there?
The equity part is it's a capital-less drawing.
How much is the capital? I've got a capital of 300,000 rand and my drawings is 6,000 rand. Is it correct?
Yes, so it's 294.
Okay, then my drawings is
294,000, yeah.
Rand, but it's not yet complete, Oprah. We still need your profit or loss from the income statement.
Yes.
Okay, what are my liabilities?
The liabilities, we have trade payables. There's an amount for delivery which is not yet paid.
Not yet paid, right? We still owe that.
Yeah, on the additional information.
All right, I think it's additional information number 3, 1.5 from purchases. So the 500
have not been paid.
Okay, let's see. Okay, so it's going to be 500 rand.
Yes.
500 rand. Okay, what else does go with that? What else do we have that is missing?
We also did not put on the we are now doing the financial position. We have that amount for insurance, the 600 which was paid in advance, which goes under trade receivables.
Which one is it?
The insurance premium of 300 which were paid to end of February 2022.
Yes. Okay, so it's going to be how much? 600?
600. Yes, it goes under trade receivables.
Okay. Oprah says that, but we can still have, remember it's a cash payment transaction. So you can still go under your cash and cash equivalents. Or prepayments,
Okay.
just prepayments. Basically, it doesn't go under the trade debtors at all. So you said how much? 300 and then multiply by 2, right?
600, yeah.
I agree with you. I've put 600 rand in the third one. 600. Right. What else are we missing?
I think on additional we are done with everything.
How about the prepayment for the salary?
Yeah, we are supposed to have that as part of our current assets.
It's an asset too.
It's a prepayment as well, right? So 3,000 rand would come into our financial statements. Okay, because the prepayment. So it means that on that 600 rand, you're going to say plus 3,000. Is it 3,000? Yes.
Yes.
It's a prepayment. Then you'd say plus 3,000. Then we're going to have 3.6 under your prepayments. Because does this thing make sense? Right. So the total will be 3,600 rand. Well, that's okay. Then what else? When you look at the additional information, is it done?
Yeah, it is done.
Okay. What do you do with the Sitole with an amount of 210? It can't just be like that. And then you give it
That one we put it under. Remember, we said it's a loss. We put it on expenditure. It's a bad debt on expenditure. I think we did put it long time.
Okay. but it also has to go through to your trade debtors. You have to minus it because this person has to be accounted that we don't expect his money anymore. Your trade and other receivables will be deducted with an amount of 120,000 rands. So
You say our trade receivables will be affected with the bad debt also.
yes.
Oh, okay. Thank you for that one.
Remember, and I've explained this, I remember explaining this the last week. I said all the list of debtors, you're going to combine them all together and form what's called the trade and other receivables. Okay. So if the client is actually not paying or died or irrecoverable, insolvent and stuff like that, you're no longer expecting that money from the person. So it has to be out of our list of the trade and other receivables accounts. Does it make sense?
Yes, it does.
So you're gonna have 1.410 as your trade and other receivables. Right? Is there anything else that is missing? Okay, somebody was speaking about the delivery fees of 500. Did I include this?
You did on trade payable.
Trade payable. So it means that.
On the other liabilities.
Did we put it? Yes, we did. We did. Sorry about that.
Yeah.
Okay, so I don't see anything that has been outstanding in here, right?
I wanted to ask you on that additional information. We
What is-
deducted 110 for bad debt on trade receivables. Does the 1,200 also affect the trade receivables, the one which was recovered?
No, it wasn't. Let me tell you why. Thank you for raising that question. I was waiting for it. It doesn't. Remember, initially it was included as part of our, it will be assumed that it was included as part of our trade and other receivables because we don't know, we're dealing with the current year, which we don't know when Stein was actually insolvent, right? However, we recover that, meaning that it was written off in whatever the year that was there. We don't know which year was it. But later in the years, which is the current year, he says, I'm here and then I want to pay you. Then we recover an amount of 1,200 rand. It will only affect your incomes as part of your other incomes.
Okay, I understand.
You know what I'm saying? So
yes,
the assumption will be it was based in the previous years, which we don't know which exactly that year was. But however, we are receiving it in 2021. It should be part of our other incomes. That means that we have deducted our trade and other receivables way back then. It's an assumption.
Okay.
Right? Same applies to Sitole. It's actually in the current year. That's why it's affecting your trade and other receivables.
Okay. Now I see. Yes, it does. Thank you.
Thank you so much for that question. What else do we do? Okay, I combined your statement of financial position with the statement of changes in equity. The only thing that we need in here is the depreciation. Okay, so my gross profit is 344,000, if you can recall quite well. And then my incomes, it will be 12512 plus 6,000 rand plus 1.2. Then I've got 19,700 rand is my other income. So you'd say 19,700 rand is my other income. And then you're going to have my expenditures. My expenditure amounts to 210 plus 3.5 plus 13,000 rand plus 5,000 rand plus 2.4 plus 35123. So my expenditure amounts to 59,110. So clearly we've got a problem. We've got a profit, not a problem. My apologies for that. So we've got a profit of 15. So we've got an expenditure amount of 59110. And I'll put that in the brackets just to ensure that I'm minusing there. So however, you're going to go back and say 344,123, and then you plus it with 19,700, and then you minus it with 59110. Then we've got a net profit of 304,590. It will be here. This is profit. My profit amount will be 304,590. Okay, so the reason why I'm seeking for this profit is because I need to complete my statement of changes in equity, right? So I'm just going to put my net profit. Remember that forms part of your equity, which is 304,590. And then you're done with this. So Remember, a statement of financial position is covered. Our statement of changes in equity is covered. Our income statement is covered. And then we did the major part, which is your PPE note. That will be it with regards to question 4. I don't think we'll finish up this question because we are left with a small amount of time. Okay, but is there any questions that you guys want? Okay, we are actually done with it. Let me just give you how the solution was performed. Just a moment. All right, yeah, that's part of your solution. Let me start on top there with you. Okay, statement of, okay, this is the question itself. And this is your statement of profit and loss. That's your income statement. We had a profit of 304,590. And this is your statement of financial position, your asset part, your equity part, along with your liabilities. Okay, so it means we are actually done in here. Right. So let me just quickly go to, I want us to go to question 3. Question 3 says that we've got a list of transactions. I think it's 2, 4, 6, 8, 10, 12. So they want us to do the cash journals, all right, across the above transactions. Right. So this would include your cash receipts journal, your cash payment. Remember, the business owner is a VAT vendor, meaning that he is actually registered for VAT. All right. I'm going to start with transaction number 1, which is the cash sales with an amount of 10,000 rand. How do you treat this account in terms of the journals? Where does it go? Where does it go?
Okay.
It's sales journal.
The cash
sales
journal.
journal.
Sorry.
Sorry, my screen is blank. I can't see anything.
Okay, just a moment.
Cash receipts.
It's cash receipts, so CRJ.
Clear on now.
CFJ.
Yes, cash receipts.
Thank you. And then how do you record that? Okay, obviously you're gonna put.
So you put it as.
You're gonna have your date and then your details. Okay, let me just do this quickly. Just a moment. I want to show you my Excel spreadsheet now. Can you all see my Excel spreadsheet?
Yes.
We can.
Right. So this is how you're going to be presented with your CRJ. So you will just say sales and the analysis of receipt. Let's say you say sales or you say bank. And then when you're selling, you're receiving the money that will come out in the bank, all right? That will be in the bank. So how are you going to record this transaction? So I just gave you a picture of how would it look like. Let me go back to the question quickly.
Wouldn't it be cash? And then you record it under bank.
Bank.
I can't see the amount.
Okay, I brought the screen back. Can you see the amount?
The 10,000 under bank.
10,000 under bank.
And then it also goes to your sales.
Sales, the same amount.
I will assume that because it doesn't, or sorry, in any amount where it's not stipulated that we need to, well, I have to assume the VAT, right?
No, the VAT is there because it's a cash, it's a VAT vendor business.
Yes.
It told us specifically that it's a VAT vendor business.
So we'll have to subtract the VAT amount before.
Okay.
So in the sales, it wouldn't be the whole amount. It would be the amount minus your VAT.
So it will be the amount minus your VAT. It's 15 divided by 115. I hope everybody agrees with that. I beg your pardon? So I've got 86956. I beg your pardon?
I'm saying the VAT amount is 1,500, where which we put on the VAT input.
It's an output because it's a sale.
Yeah, it would be VAT.
Yeah.
It will be an output because it's a sale. So basically you'd say 10,000 multiplied by 15 divided by 115. Okay. So you'd say 10,000 multiplied by 15 divided by 115. Was it Sepiso?
Yes, Pumi.
Or Pumi, yeah. Your VAT amount will be 1,304 rand. Obviously you need to minus your 10,000 from that one. And then it will be 8696. That will be under your sales column.
Yes.
Makes sense?
Yes.
All right. Let me move on to the next slide.
I've got a question there.
Okay.
This amount, 10,000 includes VAT, right?
The 10,000 include VAT. Yes.
Oh, okay. No, I wanted to check on the calculation part, because if it includes VAT, I understand.
But are you fine with the split now?
I want to try to calculate and see if I get the same amount with you
Okay.
for the VAT amount.
If you've got the calculator with
For
you,
VAT,
let's say
1,304.35. That's what I'm seeing for VAT amount.
that's your
Because
VAT.
what I did, 15 over 115 times
Yes.
that amount.
That's
Okay,
correct.
so it's fine.
Are you
Okay,
sorted?
it's fine because yeah, I'm sorted now.
Okay. Any other questions before I move on? Okay, let's look at transaction number 2. There was a draw of check for wages with an amount of 3,500 rand. How do you treat this? Quickly.
Wages, debit, bank credit.
I'm sorted now.
The analysis for wages is statement of profit and loss, and then the analysis for bank is statement of financial position for amount of 3.5 each, I think.
Okay. So is that Tapizo?
Yes.
Okay. So Tapizo says that is it a CPJ or is it a CRJ or is
Oh, CPJ.
CPJ.
Okay. So tell me, you said come again, Tapizo? I didn't get that part.
Wages is debit, we debit wages, and then bank, credit bank,
Okay.
statement of profit and loss for wages, statement of financial position for bank, both for an amount of 3.5 in the CPJ.
Okay. That you're in line with my thoughts there. Guys, you need to understand one thing. Salaries and wages, they don't attract VAT, right? Don't be confused about which VAT input or VAT output will be allocated on. So salaries and wages, they don't attract VAT. So if you can look at our cash receipts journal, cash payments journal, we've got the last column cost, the sundry accounts. So the sundry accounts record transactions which they don't fit along the transactions that are given on the framework of the CPJ or the CRJ. So what you do is you just go to the analysis of receipt and you go to the bank and put that amount, and then you go, if it does qualify to feature under those columns, and then you're going to go under your sundry accounts, and then what you're going to put there is say wages, and then you put the amount. Under the details, you just tell us that is wages. I don't know if that makes sense.
Could you please repeat that?
All right, wages and salaries, they don't attract VAT, right?
Okay.
When you face up with this kind of a transaction, what you do is, if you're required to do the CPJ, for example, you're going to say check number as your, what is it, details. And then obviously you're going to say bank with an amount of 3,500 rand. Sometimes you don't have the column for wages because it's going to be a bit bulky under your CPJ. Then, but we've got a sundry, a separate columns called the sundry, where you're going to put transactions that they don't feature on the framework of your CPJ.
Oh, okay.
So the amount are going to be under that sundry. You'll just put 3,500 rand, and then the details is there for you to explain what is it for. Automatically, it will tell us that okay, there is no column for wages on the CPJ. That's what the sundry is all about.
Okay.
So you don't have to worry about VAT there because it doesn't attract VAT. But Triple P received a payment of 10,000 rand for the sale of inventory. Quickly, time is no longer on our side.
So CRJ.
CRJ, and then what's the recording looking like? How would it look like?
Your 10,000 goes to your bank, which is a debit.
Okay.
Then you would do the same where sales include VAT, your output VAT. So you would have to say that minus the VAT.
Okay.
Then record, I think earlier, I'll just copy from the ad, was 89 something would
Yes.
go under sales.
Right.
And then our 1304 would go under our output VAT.
That's correct. Everybody?
I agree with you.
Okay, thank you so much. Payments of telecom account with an amount of 250 by cash. What do we do here? There's a telephone expense that has been paid. It goes on?
CPJ.
CPJ, yes.
Yes. So
How would the record?
250 will be on the credit. You debit the bank.
Debit bank?
Not debit, sorry. 250. Then
250?
VAT input. Yes, VAT input of let's see. I'm calculating.
Okay, so basically it's going to be the VAT input of 250 multiplied by 15 divided by 1.5.
So VAT input of 32 rand 50.
Okay.
And the other amount is 217.39.
200.
217.39.
Oh, so it's going to be 217 basically, because you can round that off.
Yeah.
Okay. And what else? So bank has been affected.
Yeah, I think I'm.
Can I help, Okra?
Yes, you can help. Oprah. Please go ahead.
So the 250 would go under bank, credit bank, and then the 32 VAT, rand for VAT, or
Okay.
33 rand for VAT would go under your VAT input.
All right.
And then under your sundry account, you would
Yes.
have 217 as the details as your telephone expenses.
The difference in between 250 and 30 whatever, right?
Yes.
Okay. Thank you very much. Did you all get that? That's how the split is going to be accounted on. So you actually going to have your bank, and because we don't have the column for telco, just verify on that one, because maybe it might fit under your purchases, but it wasn't an immediate purchases. So the split was 250 multiplied by 15 divided by 115. That goes under your VAT input. And then we've got under your sundries, you'd move what's called the telecom, and then you put the difference between 250 and the VAT portion. It will go under that. All right, let's have a look at transaction 5. Inventory was purchased by credit with an amount of 300,000 rands. Quickly on the recording. It's a piece of, right, let's have Pumi.
Goes to your purchases journal.
Purchases journal. Thank you very much. And then how do you record this?
What is the name of the person? Is at DBA distributors.
DBA distributors.
Is, and then we just need to minus input from the amount.
It's going to be 295,500.
Yeah. So then, so we would have under trade payables.
Trade payables.
That my amount 300,000 minus the VAT.
Okay.
I'm just trying to calculate it.
Okay. So basically, under your purchases journal, you're going to have the column for I think it's purchases and VAT input, as well as your trade payables.
Yes.
Okay. So the total amount of 300,000 rand, would it go under your purchases? And then you're going to split 15% of VAT along with your trade payables.
No, the total amount will go under trade payables.
Trade payables will amount to 300,000 rand, and then you're going to split in between VAT.
Then you minus the 39,130 as your VAT.
Right. Anybody there?
You then, under your purchases, you put the 260,869.
The difference would fall under your VAT.
Can I just try it, please?
Yes, you may.
So like Kumi said, trade payables DVA is going to be an amount of 295,500 for debit, and then we're going to raise another one, trade payables from Marco for 37,500.
Yes.
Input VAT. I plussed it together, so it's going to be 8,250 debit side. Inventory credit side 530,000.
Okay. No, that one is also quite correct there. So the split will be the same. 250 multiplied by 15 divided by 115. Obviously, it's going to go towards your VAT along with your purchases. And then 250,000 rand will just go to trade other payables. Right. So purchases journal has been covered. Let's look at the following transaction, the below transaction. Goods were sold in credit worth an amount of 30,000 rand to clients. Somebody quickly. Someone go ahead.
I think it goes on trade receivable account.
No, but we're looking at the journal. Which journal is affected by?
The journal. Yo, I'm
It's
lost
the
now.
sales returns journal. Sales journal, sorry.
Sales journal, yes.
Journal.
So it will be the same amount.
Yeah.
Sorry, it will be the same process. Remember, under the sales journal, you've got trade debtors. So it means the trade debtors will be filled up with an amount of 30,000 rand, but the split will be 15 divided by 115. That will go to your VAT output, and the remaining, which is your what is the other one? VAT and your sales, right? So sales will be the difference between 30,000 rands minus VAT. It will go through to your sales. Everybody happy? Sorry?
Yep.
What? Next
Yeah,
transaction. Clients return goods with a defect to the value of 6,000 rand. What do you do on this?
Let's return journal.
I think it's purchase.
Sales returns.
Purchase.
Yeah.
Sorry. Yeah.
Sales returns journal. And then how do you record that?
As trade receivable less VAT output.
Yes.
So the whole amount will go under trade receivable, and then less VAT will go under sales return.
Sales returns. All right, yeah, that's quite correct. So the whole amount of 6,000 rand will go to the trade and other payables, and the difference between 6,000 and VAT will just go through to your sales returns, and the VAT amount will go to your VAT output. Everybody happy? All right, let's look at the updated goods that was also returned with an amount of 3,500. It's actually the same thing, right?
Hmm.
So sales returns will be affected. So you're going to have your trade debtors, sales returns, as well as your VAT output on that one with regards to. But the fact remains 3,500 will go to your trade payables, and the sales returns will be the difference between 3.5 from the VAT, and the VAT will be standing with its own VAT amount. Right. Triple P has realized that goods purchased from Leraton suppliers has been damaged and was returned with an amount of 4,000 rands. Okay.
Purchases returns.
Purchases returns. So you're basically going to have the same columns, your purchases returns, VAT input, as well as your trade payables. Okay. So 4,000 rand would form part of your trade payables, and 4,000 multiplied by 15 divided by 115, which is your VAT input, and the difference will just go to purchases returns. Make sense?
Mm-hmm.
Last transaction, Triple P has also returned back the goods valued on 16,000 rand to Macro due to rain damages as part of their deliveries. Right. So purchases returns will also be affected as well. And you do the purchases returns, and then you're going to have trade payables and the purchases returns column along with your VAT input. And the 16,000 rand will affect your trade payables. And the 16,000 multiplied by 15 divided by 1.5. That will be your VAT portion, and the difference will just go through to your purchases returns channel. Make sense?
Mm-hmm.
Right, let me go back to my teams and see who's got questions so that I can be able to answer. Any questions? Any questions? Any questions? Okay, let's have a look at question 1 here. I think this is going to be the last one here. You guys should be, your brain must be tired on numbers now. Right, number 1 says Triple P Supermarket is a VAT vendor is defined. Transaction number 1 says that Pooty has deposited 30,000 rand as a start directly into the supermarket business. Okay, this is what I'm going to do now. I want to show you this. And this is how we're going to answer the questions based on what I'm going to show you now. So I just want to open up my spreadsheet. Can you all see that?
Yes, we can.
But I want us to answer based in compliance with the BAE. You all remember that, right? So you're going to tell me the accounts to be debited and the account to be created, whether it's an asset, it's an equity, it's a liability. That's your basic accounting equation formula. Can you all see that? So basically you will tell me which account are affected and whether it's an asset or equity or liability. Right, let me open up the question now. So you all see the question now, right? Okay, it says that Pooty has deposited 30,000 rand as a start directly into the supermarket business account. Which account are affected and where does it go?
Capital.
Capital.
Bank.
Capital and bank. Which one is debited and which one is credited in between the two?
Bank would be debited.
Bank will be debited and
Capital credited.
capital will be credited. So according to that framework, obviously you're going to put exactly the same amount, but the other one will just go to your equity and the other one will just go to your assets. Makes sense. Right, the loan to an amount of 60,000 rand was obtained in a repayment of more than 12 months period, and it was also paid directly into the supermarket's account. Which two accounts are affected here?
Trade payables and liabilities and bank assets.
So it's bank, so it's assets, which is the bank, and is the liability.
And liabilities.
All right. So I just want to clarify something concerning liability there. Because this is more than 12 months repayable period, it means that it's a long-term liability. It's not going to be trading other payables. It's going to be long term under your non-current liabilities. Makes sense? Simply because it's going to be paid in more than 12 months period. But thank you very much. Let me move on. Equipment to the value of 120,000 rand was purchased by cash by Triple P supermarkets. Accounts affected here?
Equipment and bank.
Equipment and bank. Which one is debit and which one is credit? Why?
Equipment will be debited.
Equipment will be debited.
Getting more equipment, and then our bank is decreasing because we're taking money from the bank to buy the equipment.
Thank you so much for that. Because the money is moving out of the business, so it's an asset. It will decrease. Yeah, so it will be an account to be credited with exactly the same amount. Okay, so in this one, you are going to have effect and assets on both the amounts. Okay, so the other one will be a plus and the other one will be a minus. But Pooty has withdrawn cash amount of 5,000 rand for personal use. Quickly.
Drawings and bank.
The bank
So it's drawings and
the
bank.
equity decreases also.
So a bank is decreasing with 5,000 rand. Do we agree?
Yes.
What else?
Yes. And the equity is decreasing with 5,000.
Equity will decrease with an amount of 5,000 rand. Thank you so much. A payment of 16,000 rand was made directly to MAFS deal company. Who is debited and who is credited here? Which accounts are affected?
Decrease bank.
Decrease bank because the money is stepped out of the business.
And then you increase the
Trade payables.
Trade payables. Trade payables.
No, it's an expense to affect equity.
It's what?
Oh yes.
I think it's an expense. So it affects equity.
It's an expense with that.
It's not clear whether it's an expense or a purchase or what. What are we paying?
The deal that
we
we
don't
have,
know if it was a credit.
so it will be an expense that has a decrease on, remember, I think it will reflect on two liabilities as well. So the assumption would be, we had a deal with MAFS, right? So now we are decreasing our liabilities because we are paying them that amount. You understand? So that will be based on assumption. So it will be a liability. Makes sense? So the liability will our liability is decreasing along with our bank because that 16,000 rand is stepping out of our bank.
Okay.
Triple P provides services to Satonga Foods with an amount of 10,000 rand for cash. Which accounts are affected?
Bank and trade receivable. It's all assets.
Equity.
Bank and
Services rendered.
Services rendered.
services rendered, which is an income, right?
Yes.
So we're going to have bank and services rendered. Our bank is going to increase with 10,000 rand, and our services rendered would also go high with an amount of 10,000 rand as an income. Right. They have also provided services to Dinogo with Dinogo board with an amount of 6,000 rand on credit. Effect.
Bank services rendered
Okay. Somebody said bank.
and services rendered.
Okay. Any take on that? Thank you so much.
Trade.
Any
Yeah, I'm
suggestions?
thinking.
It's on
Yeah,
credit,
I think
so
it's
we
okay.
haven't
Yes,
received.
I think it's inventory and trade receivable or on the asset side. Yeah, inventory is decreasing.
Okay.
And we
Accounts
have
that are going to be
so it's
accounts.
minus 6%.
Let me go to my teams and just here. Okay, please go ahead. Who is it? Is it Pumi?
It's
On the call.
Oprah, I said, I think it's on is inventory and trade receivables.
Inventory and trade receivables.
Yes,
Then I
so it's
said
one side.
bank
It's minus
and
inventory.
service
You-
rendered.
You
Okay, let's wait for Oprah to finish.
I think it's minus. You're minusing 3,000 on inventory, not bank, because we provided a service. Then we haven't received the money, so it goes on trade receivables. So you debit trade receivables and credit the inventory because it's decreasing. I think.
Okay. I think it was Nicole. Nicole, you can go ahead, please.
No, I think she's right now that she explained it.
Okay. Is there anybody who wants to dispute that? You can go ahead if you want to. So please, I see you want to make you.
No, I was just wondering if is it not services rendered on equity?
Yeah,
And then,
yeah,
excuse me,
where you start, it's actually quite.
it's two
let's-
transactions. The two transactions, I think.
Okay, let's go back to the questions quickly. Right. Thank you so much, Oprah. Yes, by trade and other receivables, you are correct. Okay, so we're going to debit our trade and other receivables because debtors are going hard since we provide service with credit. However, the service rendered would be the account to be affected. There is no inventory here. We provided the services, meaning that our service has gone up, which we will increase our services rendered as an income to the credit side. Make sense? We haven't
now I
bought,
understand. I get it.
we haven't bought any stock here. We only provide service that cannot be measured, but it's measured in terms of how much does it worth. So just be careful around that one.
Oh, okay. Oh, okay. So service rendered, you debit or you credit it?
You credit them, goes up.
It's going up.
It's
Okay.
going up, and remember, service rendered is an income. Incomes increase on the credit side.
Okay. Thank you.
All right, you're welcome. Staff has been paid a wages or somebody. Sorry, I didn't mean to.
Before you carry on, can I ask with in regards to Oprah, because I think okay, can I just ask if there's a sale that was made, right? So someone purchased sale for, inventory from our account. When would we debit inventory, no credit inventory? Like when would we? I don't know how to pose this question, but you know that type of question where you say sales, and then you also include bank and inventory, all those things. When would we do that?
Would it be enough, or would it answer your question if I can say Triple P Supermarket sold inventory on credit
Okay.
to one of the credit account holders?
Okay. So he sold. Excuse me. Can you repeat that again?
There was a sale of inventory. Okay, let's
Oh,
forget.
I was asking cost of sales. Like when do we talk about cost of sales, and stuff like that? When would we do that?
Okay.
Include them in like one transaction.
Oh no, I get you. The cost of
Yes.
sales, the sales itself.
Yes.
If the sale occurred on cash, all right, of inventory, that's where the cost of sales will come up into the picture.
Oh, okay.
Okay. So, for example, there was a sale that went up. Obviously, it will come to the credit side because it's an income, and there was a cost of sales. But you need to also bear in mind with regards to the method used with regards to inventory. You remember the perpetual and periodic.
Okay.
Please go read that. It will give you an idea.
Okay. Thank you.
Are you getting clarity? Just a
Yes.
bit.
Yes. Thank you.
Right. Any other questions? Okay, no questions. Let's have a look at the next transactions. Staff has been paid a wage of 75,000 rands. I think there was no way you can get a wage of 75,000. I think I was supposed to say 7,500. How do you record this?
You credit bank because it's
credit bank.
decreasing, and then you debit wages because, we have salaries.
Because expenses are going down, right?
Yes.
So it will be exactly with the same amount. So under that recording, you're going to say asset bank 75,000 rand and equity with a decrease of 75,000 rand because expenses decreases your equity. You remember that principle?
Yes.
If somebody's not clear on that one, let me help you out quickly so that you don't get lost. Triple P placed an advertisement on Prime Media worth of 15,000 rand for cash. How do you trigger this?
Credit bank.
Equity would they be debited?
So it was a cash bank, so obviously the bank will just come down, right?
Mm-hmm.
And then the expense, we pay that by cash, it will come down as well, right?
Yeah, it would be
So it will asset
credit.
and equity. Am I making sense?
No.
Yes.
So
Yes.
Okay, let me just go back to my teams and see who is having a bit of a difficulties. Because somebody said no. Who is it?
it's me, sir. I
Um,
don't understand how.
hello.
Can I continue?
Yes.
Yes. I'm saying I don't understand how expenses are decreasing. Are they not supposed to increase?
Okay, please tell me how so are they increasing?
And then we are having like more payments.
Yes.
So doesn't that increase our expenses?
No. If you are paying, okay, for example, if you've got an account with Truewords and then you pay that on a monthly basis, so the more you pay, will your expenses go down or will it go up?
Or it will go down.
It will go down, right? Because exactly if you were left with 6,000 Rand with Truewords last month, and this month you're paying 1,000 Rand, obviously it comes down to 5,000 Rand. Make sense?
So in our equity, right?
Yes.
That means it would go on the debit side.
It will, yes, because equities increase on the credit side. However, because the expenses are decreasing, your equity will come to the debit side.
All
Okay.
right.
Any other questions? Let me just not cut you there. All right, thank you. Let's see, what was the next transaction? Clarenzi must settle her debt with an amount with Triple P for 12,500 Rand. So that's a cash payment, right?
Yes.
Okay, so let's see now. Which accounts are affected?
Bank and trade receivables.
Okay, so there's one thing that I've realized about you. You guys are not failing to understand what determined bank, but some other transactions are giving you a little bit of a challenge. However, you just need to practice and practice and practice so that you'll be on the same page with the principle. Okay, so we had bank coming down with an amount of 12,500. Does it make sense? And which account, what of the accounts are they affected?
Trade receivable.
Trade and other receivables.
Yes.
Debited.
Okay, why do you debit that?
Is it not going down?
It's an asset. Which side does the asset decrease?
Credit.
Credit side. So is bank and trade and other receivables with the same amount.
Yes.
Telecom has also paid, has been paid. I think we covered this somewhere up. Didn't we do something like this?
It was on the other exercise, not this one.
Or not this one. Telecom has also been paid with an amount of 2,000 Rand for communications. Okay, so the assumption will be cash. Bank will be affected, and the telecom as an expenditure itself, it will come down. Okay. So, but do you guys realize the more you become in arrears on your account, it means that your expenses are increasing. Does it make sense? They're not coming down.
Yes, it does.
All right. I had somebody saying sorry. I think I blocked you there. You can go ahead.
No, I wanted to ask, is it correct to say in terms of the basic accounting equation,
Yes.
with this particular transaction, is it correct to say that our assets are decreasing
Yes.
and our equity is decreasing as well?
That's very correct, because our expenses, remember, they decrease your equity. In terms of the account equation, you're correct. And that's how it's supposed to be. Remember, when you do your income statement, the standard tells us that the incomes increases your equity and the expenses decreases your equity. You remember when we were doing the income statement on our first question, I think it was question 4. We had a net profit, but we didn't put that amount of money in the brackets simply because it hides your equity. Right. So that's a very correct comment on that one. That's a very correct principles, basically. Can I move on?
Yes, sir.
Okay. So I was on telecom for communications. Triple P has received a commission with an amount of 6,000 from rental properties. Let's see.
Rental income.
And rent income.
See, this is the part where your equity would just go up with an amount of 600 Rand because it's an income. Incomes are increasing and it does increase your equity along with your bank, right? Because the money is coming through to the business bank. Happy?
Yes.
Yeah. Rental of the supermarket has been paid by Triple P with an amount of 32,000 Rand. You rent a space where you're making a payment on a monthly basis. Which account has been affected here? Please leave the bank out.
Bank and rent expense.
Bank and rental expenses, right? Okay, the last one, it says Mark was debited for the services rendered of 2,000 rand. Okay, do you guys, in relation to your own personal account, do you understand what the debit is and the credit is?
Yes.
Okay, so if you've subscribed to Vodacom for a cell phone on a monthly basis, when they take the money out of your business, they're debiting your account. Okay, meaning that whatever that you have available as your income is going to be reduced with exactly the amount that they took. So when it's credited, means that when you're getting your salary or when somebody's depositing the money, your account will be credited with exactly the same amount. Okay?
Yes.
Okay, can somebody answer me here? What's your take? I gave you an answer automatically.
Right.
So a bank increases
Bank increases?
because Mark's account was debited for services rendered,
Yes.
which is we getting our money back. And
Okay.
Mark is a debtor,
Mark is a debtor.
which is then so if our bank increases on the debit side, then I'm not so sure whether it's trade receivables. We're crediting it because our debtors are reducing.
Yeah,
So
it will depend on when. Yeah, they are reducing. It will also depend on, maybe I wasn't quite clear enough on this question, but it will also depend on when did the service occur, all right? But in reality is, at that time the service occurred, obviously the services would be, the assumption would be it was occurred on credit, okay? Now, Mark, he's actually paying his credit, which Mark is a debtor to us, okay? So a bank will actually increase there, and then a trade and other receivables will just go down with exactly the same amount. So it's a plus in the bank and it's a minus with an asset, which is a trade and other receivables. No questions. I thank you so much for the attendance today, and I'll see you guys hopefully next week.